Let's get a move on then and put the spotlight on Sona BLW. It's been a beat on all counts. Rohit Nanda is the Group CFO, now joining in on the show to discuss the quarterly performance. Thanks so much for taking time out. Now, overall, we have seen your earnings come in above what the street was penciling in, a 19% growth in your top line, and that's largely been aided by the EV segment. So how is it that you're expecting the future quarters to pan out, especially from EV in Q1 FY25 in terms of demand trend?
First of all, thanks for having me here. Look, we don't give future guidance. If I was to look at the past 3 years since we've got listed, we've grown our revenues at a CAGR of more than 25% and profits at almost 30% CAGR. We've built an order book which currently stands at about 22,600 crores. So that should guide us our future growth. So even in the past also, if you look at the underlying industry trend, we've not really, we've surpassed the growth rates of the underlying market by a big margin, and that's thanks to our strong order book. And we estimate that it should continue to be the case in future, although there are some pockets like the Indian off-highway market and Indian CV market, which are looking a bit weaker in the year to come, that is FY25. But overall, we expect that our strong performance should continue.
Let's say from Tesla. For me, that's a benchmark of where EV is moving. Tesla is talking about a slowdown. But your numbers are not capturing in any kind of a slowdown which is happening at a global level in the EV car market and domestically in the EV two-wheeler market. Why is that?
So one, I must caveat that we don't specifically, customer-specific questions and all we don't address. But yes, if we are to look at the overall market for the EVs, in case of the global EV market, there are talks of a slowdown. But I believe that slowdown is relative to a very high growth rate, which this market has seen over the last few years. So it is not as if this market will not grow. But let's say a market from a smaller base, if something has grown by, let's say, 50-60% CAGR and it slows down to a 30% CAGR, that is, of course, the rate of growth is slowing down. But it's not a case where people are talking about a degrowth. So that's one. In case of the domestic two-wheeler market, I believe there have been reasons. So I believe the FAME 2 subsidy is coming to an end. So there is a bit of an uncertainty around, how the future will pan out with respect to the domestic two-wheeler electric vehicle segment is concerned. But I believe that is more, let's say, an immediate term concern. But if you look at the longer term trend, we very strongly believe that electrification trend should continue. So there may be, intermittent upheavals, which probably can last for a few quarters. But medium to long term, we see this market continuing.
Currently is at 22,000 crore. Could you give us a sense of the breakup? How much is ICE, how much is EV?
The order book?
Yes, please.
Okay. So 79% is EV order book and 21% is non-EV.
You've grown your revenue at 30% plus, bottom line growth 25% plus. Do you think for you to maintain historical run rates will be easy or it will be difficult?
Like I said, we don't give future guidance, but I believe a growth rate of close to 25% CAGR is something which 20 to 25% is certainly maintainable.
And when your order book is 80% broadly from EV and 20% from ICE, do you see this changing 100% in favor of EV? And if it changes, can I say the ICE business is the legacy business, which is low margin business that will be going lower and aggregate margin will start moving higher? Can I say that that is the normal course of trajectory for Sona Coyo?
One is that I think the underlying order book will continue to reflect, what our customers want and where the market is trending. But we have products for, all spectrum of vehicles, be it ICE, be it hybrids or EV. So I think the order book in case people are talking about a slowdown in EV and that kind of materializes, the fact is that we have products which cater to all segments of the market. So from that perspective, I think the order book will continue to reflect, how the market moves. But yes, if the electrification trend continues, which we firmly believe, this order book will continue to grow more on the EV side than the non-EV side.
Sure. The other thing,
and in terms of margin, I'm sorry, I missed out the second question. So in terms of margins, I don't think there is a very large gap between, let's say, the margins that we make on the non-EV side. Because historically also, if you look at our pre-listing numbers and even post-listing also, when EV was a smaller component of revenue, our margins were in the same range of 26 to 28%, and they continue to be there.
At the same time, Rohit, we understand that you've added a new product as well, which is actually for CVs in your portfolio, right? What's the revenue potential for the CV segment in particular?
So CVs currently are close to 15% of our overall revenue. And our strategy, if you see, is to continue to build products in which we can do a significant value addition for the customer. So the product should be technologically challenging, so there is an entry barrier, and it should make us, the kind of margins that we make on an overall basis. So that's generally the criteria for selecting the products. And if you see, since in the last 3 years, I believe we've developed nearly, I think, 8 or 9 new products in the last 3 to 4 years. And in fact, the order book that we've built in the last 3 years, 50% of that order book is coming from these new products. So the strategy is to continue to add to the product portfolio, and that is what will continue to drive our future growth.
Quite curious about the newly appointed or constituted Mergers and Acquisitions Committee at your end. What's the rationale behind this? And, whatever acquisitions come out of that, is there any strategy, whether it's going to be organic, inorganic, which segment?
So if you see historically, most of the growth has come from the organic side in the last 3 years. But given our strong cash flows, we believe that we will like to do acquisitions in certain areas, which could include areas where we have interest in the newer technologies. We last year completed a new acquisition on the radar sensing side. Now, again, that's part of our strategy to grow on the ADAS side, which is something that we feel is part of the way we see future shaping up for automotive market. So these would be certain areas of interest where we can fast track our journey on the technology roadmap that we've charted for ourselves. So those are the areas where we are looking for acquisitions, and the purpose of forming the committee is to kind of expedite the decisions, because there are multiple evaluations which we do, and with a subcommittee of the board, it's always easier to sort of have a shorter sort of board meeting and kind of be able to take the first level decisions, and eventually that kind of helps us in faster decision making. But eventually everything goes to the board for the final approval. So this is more in terms of operational ease, I would say, that a subcommittee has been formed.
There's nothing that you've zeroed in on or identified?
I'm sorry?
There's no acquisition per se that you're targeting right now that you may have earmarked or zeroed in on?
So nothing that we can disclose at this stage. I mean, there are always, opportunities which we are evaluating, but nothing at a stage where it can be disclosed.
Okay, good to have you. Thank you so much for clarifying and giving us a little more perspective as to how business is shaping up. So yes, they have surpassed the industry growth rate and is looking at a 22 to 25% top line CAGR. As of now, strong cash flows. So acquisitions are on the cards, but nothing being zeroed in on just as yet.
Thank you.
If you like this video, then like, share and subscribe to ET Now.